The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 20th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's have an extraordinary day and an extraordinary weekend. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way, way, way more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. That's right. Just send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in our Tigers Den, well, any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now we got a mixed market. You've got the Dow and the S&P up 49 bucks and 260, while the NDX 100 is off 32, and the semis are back 10 points out there. They're trading out at 1582, so a mixed bag, and we're going to mix things up here too. I don't even know what that means, but we're going to do it. You've got gold up $4 and silver down 4 cents out there. Nobody's got the memo. Apparently, there is no memo out here with everybody on the same page. You've got leading the charge the upside. It is O'Reilly Automotive up a little over 3%, nearly 13 bucks. HDFC Bank up 10% or 10 bucks. Regeneron Pharmaceuticals up 9. To the downside, it's Roku up $26, down 20%. Roku has been trading to the downside quite a bit over the last week. Amazon is off 18 bucks. No big deal there. That's 1%. Netflix down 6% off $17. Of course, I want to look at what you want to look at. Let me start by just, look, I'd like to keep you entertained for an hour. And I'll do that if you send me requests, like Ruby has asked to go take a look at feeder cattle. So we'll try to do that for her. But let me just share with you what the markets are doing, at least the data points for the day. It's really very simple out here, or we'll try to keep it simple. The old KISS theory, keep it simple, Stevie. And if we take a look at the ES Mini, just simply the 30-minute time frame chart, what you're going to notice if you look to the right-hand side, you're going to see support and resistance. And until either of those gets broken, we've got a sideways move. Now, in the side of the S&P, it's a 22-point move from support to resistance. Support being 29.99.75 and resistance being 30.22.50 out there. These eights, or the TD setup 8 and 9 counts here, have been very helpful in identifying tops and bottoms. Remember, if a top or bottom is going to form, it's going to be a bar 8, 9, or the bar following 9. It was the bar following 9 here that identified the high inside the ES Mini. It was bar number 8 to the downside that went ahead and had the ES Mini start moving higher. We're only in bar number 6 potentially, but we need a good hour and a half or so before we can make a determination whether this is going to identify the next top or bottom out here. But that's 6 counts to the downside out here. So just really trading sideways in between breakout support and breakdown resistance. Let's do the same thing. Let's go take a look at the NQ. What's the NQ doing? Heck, that's the one that's leading things to the downside. That's a little my Canadian out there. If we take a look at the downside, oh, that's interesting. What's that? Well, first of all, price is at a breakout support level, 78.8025. It has actually formed support at that level twice. If you look on the left-hand side where my cursor is at, you'll see 78.8025. It's not a reprint here. Down around 9:30. I don't know when it was. Let's take a look at that. Was that yesterday? Was that the day before? That was around September. Yeah, it was yesterday. So another 9 count, of course, our 9 count support level at 78.8025. That's muy importante out there. And this is in bar 9 of the TD setup 9 count. Now, what's interesting here is, and I've been developing software so that I can actually go test a couple of these things out here. But visually speaking, after looking at thousands of these patterns out here, what I'm noticing is, and I mentioned this yesterday, is during the night, and I want to prove it. So I don't want just the visual, because I'm just looking at a couple here, that's like proof in the pudding, so to speak, out here. So I'd like to be able to test it. But what I am noticing is that when the 9 count tops or bottoms with bar number 8, we seem to have a fairly good reversal of fortune, so to speak. So that was the last time. If you take a look at the NQ out here, and it was at about 11 o'clock in the morning. I'm going to assume that was yesterday. It has to be yesterday out here. That was bar number 8 of the 9 count. And then we have seen price move all the way back to support, which was at 78.8025. By the way, it was that 9 count that created that secondary, or not secondary, but a second breakout situation from 78.8025. So what is it Stevie is actually communicating to you? Look, I am just the narrator here. I am narrating the chart. I just simply show you the patterns. You don't even need to be a technician. You just look at the patterns, listen to my narration, and then you can make the decision. The NQ, we've got about 18 minutes here before we get to that close of the 130 bar. But if this close, or if this bar never gets down below bar number 8, we have the exact reverse of the pattern that we just took a look at to the upside out here. But I don't know. We've got to wait the 18 minutes to see if that happens. That doesn't mean if price doesn't get below bar number 8 that it can't be a turn. I'm just sharing with you an observation, and I want to go out there and prove. In fact, actually, we're just a few ticks away. There we go. So now we're a few ticks away. We know that bar number 9 right now, watching this live, is not going to be above the low of bar number 8. Doesn't mean that we don't have a bottom that is forming here. Let's watch 78.8025 and it's a 30-minute chart, so we won't really be able to make a determination as we go off the air at 2 p.m. out there. But we can see a key level of support is broken, but on the 30-minute time frame, it is in bar number 9 out there, with the bar following 9 not completing until 2 p.m. So that's what's going on. If we just simply take a look at the 30-minute time frame charts to get a feel for what's going on. Now, with 50 seconds to go, we won't do this. Really, about 20 seconds to go, we won't do this. When I say won't do this, won't do what? That is go look at the feeder cattle. So I'll do that and get that ready during the break for Ruby. Of course, I want to hear from you, too. A couple different ways to do that. 877-927-6648. Send me an email, steve@tfnn.com, and any ping inside the Tiger's den out there. So Dow now down 87, S&P off 12, NASDAQ off 86. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So lots of market gyrations. No idea what is moving it exactly, but everything is moving. If you're watching us on Tiger TV and you're looking at my screen, you're going to see a lot of these little yellow boxes next to the symbol out there. That's telling us that this data feed has just gotten clog city out here. So I don't know whether the Dow is off 122 or 131 as it's showing on my TV screen behind me out here. So this is so look, we're going to navigate the waters the best we can. I've been redeveloping software, a lot of these tools that you are looking at to use on a different version of NinjaTrader that will take advantage of multiple cores and threads. My system has a bunch of cores and threads, but it's the version of Ninja that I'm running that all the tools are built on doesn't take advantage of that. I'm hoping that will solve things like this in the future. But again, I got to get a Stevie mainframe supercomputer to track all of this stuff. So, but Ruby had asked for, let's see if it's populated yet, to take a look at feeder cattle. But you can see even only just 2 of the 4 time frame charts have loaded, and we're really trying to wait for the daily time frame in order to get the market profiles out here. So Ruby, let's just simply come back to this. We'll leave it. We won't change it. I do have the October contract up, so hopefully that is the correct contract for you, but hopefully by show's end, we've got some profiles for you to take a look at and at least understand daily, weekly, where feeder cattle is at out here. In the meantime, let's go to Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you?
I'm doing good, Steve. How are you?
I am doing well, but I could be doing better if my system were just, give me all that accurate live data as we speak. I know you're calling to ask about Adobe, and like I would normally do, as I have done, I put in Adobe into my 3 time frame charts out here for us to take a look at what's going on, and I've got a blank screen. That's not going to help us. But luckily, I actually have Adobe happens to be up because we've got another listener that's been trying to make or has been in a trade out there, and so we've been looking at Adobe for the past couple days. So we'll just kind of go back to those charts out here. I just don't know if price is really correct on my screen out here. But tell me what you're looking at Adobe for and how I can help you.
Well, I know there's a little bit of support around the 270 level, but I was wondering if I should wait till it gets down to about, let's see, what was it? 228. It's a big drop. I know but there's 2 areas of support, well, almost 3 that I see. And I'm just curious about what you think. I'm not in the stock. I'm just thinking maybe I would get in it.
Okay, so here's what I'm flying blind a little bit. Do you know what Adobe is trading at right at this very second, by any chance? Maybe you've got a 275,
275.98.
Okay. So I'm around the same price range. Thanks, Fletch. Thanks, Z. So here's what we know about Adobe and looking at the daily time frame. The daily time frame has been telling you and I that it's trying to form a bottom. It is in wave number 6. Potentially wave number 7 counts out there. Price has been moving lower, doing less relative energy. We know that because of the black lines that have formed out here. And we also know that we have a hammer candle from the trading date of, looks like September the 10th out there. And that low is 272.34. It's been tested. That low has been tested and it's been rejected. But price, my recollection right now, price is trading below Stevie's red line and also below the bottom of the daily profile. Now, I don't have the daily profile on this system. I am curious, so if I add it here, maybe it'll populate for me. Let me try this little trick out here, see if this will work for us. Oh, it does. It does. Okay, so this is good. So even though we've got these bottoming patterns out here, but what hasn't happened is in order for a bottom to really take hold, it's got to bust through resistance. So one level of resistance would be Stevie's red or green line. It's below that. So therefore, this goes into the no, I'm not going to take the trade yet column. Hasn't bottom column, let's say. And price continues to find resistance at the bottom of its daily profile, which I have as 281.47. So yes, we've got a bottoming signal and pattern, but we haven't seen, we did see a couple of days where price was above where it looked like it was really going to bottom. But now with price being back below that level, you and I have to question whether that is the case or not. So the daily is saying not so fast just yet. The weekly chart out here, and I apologize, I know you gave me some figures for support. I'm just really more focused on either the topping or bottoming signals, and then for support, different support levels for us to consider than maybe what you have. Maybe they're the same. If we look at the weekly time frame chart, I don't really have any signal of a top per se. If we take a look at wave counts from the low to the high, well, I take that back. It did get to, looks like it did get to, let me just make sure. Yeah, it got to wave number 7. So I'll be a monkey's uncle out there, whatever that means. So it did give us that valid topping pattern out here, wave number 7 to the upside. But now on a weekly time frame, today or this week is going to be bar number 8 of a potential TD setup 9-count bottom. So what I like about that is it's a potential for a bottom. The daily's got potential out there. Now, what we won't know until next week, really we won't know for 2 weeks out here, is whether this setup is going to actually complete. It needs next week to do that. It doesn't need the following week. But then a lower low could actually form on the following week to identify the bottom. Now, breakout support here for the weekly time frame, Jim, is 253.89. So I think you were at like 282. I don't remember I apologize. I don't remember the figures. I didn't write them down on a pad of paper. But so 250.389 is a level of support. And at the same time, the weekly says there's potential that the low of this week could have been the low. We really won't know until at least next week. But there's potential here, and I think Adobe is worth paying attention to. Now, all of that goes out the window, Jim, if, in fact, both those patterns don't identify a bottom. Because what's in play here is the larger, hey, I made a significant top type pattern. That's the Rhodes momentum indicator. That's with price moving higher, doing less relative energy, bearish reversal candle. And this would say support would be either, and I have to use either because it's a bullish structured monthly profile, so either 264.13 or 244.54. If I were to summarize everything, I would summarize it like this, Jim. Let's continue to pay attention to Adobe for some type of bottom pattern. The first signal might come if we see it close above one of those daily resistance levels. Right now, I would use the bottom of the daily box out there, and I believe that was 281.47. I think that was the number out there. Otherwise, let's just continue to wait and see what happens next week, maybe the week after. But there's potential here. And I just wish the monthly wasn't showing us that this could be some kind of a major top for Adobe. Stay with me, would you? And we'll come back from the break,
okay,
and I'll try to answer any other questions that you might have or something else that you're looking at. Oh, my other screen populated. We'll be right back with Jim in Palm Harbor. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at Adobe with Jim in Palm Harbor. So, Jim, after that kind of analysis, what questions have I posed in your mind?
None, really. I mean, that's about what I was thinking. I just wondered what you thought about it and everything. And if you got time, could you look at Disney? The last about 31 days, it's been trading in a box, a range consolidation pattern from about 131.64 to about 140.23. And if you look on a weekly chart, it also has been trading in a range for about the last 1, 2, 3, 4, 5, 6, about the last 7 weeks.
Yeah, no,
and
absolutely.
I was just wondering if you thought that
sure.
was the bottom at around 131 or so.
So you're absolutely correct. It's Disney. If we take a look, the weekly chart, I think, is the one that is the clearest for you and I as far as what to be focused on and paying attention to. And that is the range that it's trading within from high to low, in essence, has been the TAS weekly profile. And so the top of that profile is 142.21. That profile formed back in July of 2019. There were a few weeks there, Jim, where price was above that level, a couple weeks specifically. But it just never held, never had 2 weeks above the top of that profile, 142.21, what Stevie likes to call follow through. So it never had the follow through. And now what we've seen here is price testing the lower part of that range, or this is a bullish structured box out here. So it's testing in the bottom of that box is 131.85. You're at 132.17. Volume this week so far is 40 million shares. Last time it was down here was 43 million shares. So maybe it's similar. That last time was August 19th, 2019. So it's really range bound out here. And the thing is that if it does take out the low of the week of August 19th, it could set up an A to B equals CD to the downside. Now, the monthly and the weekly time frame charts are suggesting that is the likely outcome. It's the likely outcome because this also has a significant topping pattern. The Rhodes Momentum Indicator top hasn't busted through support out here, but it's just the recognition that this does on a monthly basis, a larger time frame, have a topping pattern out here. Now, it's Stevie's green line, 131.09, that price would need to close below before the monthly time frame. And let me just reduce this chart here, would suggest to you or I that price might head down to the 122.43 level out there. That's the top of that monthly box. Now, we'll know if that's going to be an outcome if, in fact, the weekly chart gets a close below that swing point. I'm not suggesting it's going to happen today, and I don't have a guarantee that it's going to happen, but this, too, has a Rhodes Momentum, the weekly chart, that is, has a Rhodes Momentum Indicator top. So the cool thing about this is there's nothing on a daily time frame that would suggest to you or I, Jeff, that now would be the time to come in. There's just nothing, from a pattern recognition standpoint, there's nothing here. So this says, okay, let's wait to see how this plays out, because if you're looking to get into Disney, if in fact it is able to close below over the coming weeks and get below 131.02, then that creates an A to B equals CD to the downside, and we'll know what to be looking for there, which is some type of pattern to set up on the daily as well as the weekly. Maybe it's the completion of a 1-to-1 or 1.272 A to B equals CD to the downside, more likely the latter at 119 versus the 123.95. But I think at this stage here, we just simply you remain idle at this stage. You continue watching this just as you are Adobe. But interesting, both have similar type of topping patterns out there.
Okay. Steve, I think you're awesome, and I appreciate the information.
Well, you're welcome, and thanks for the awesome comment. I appreciate it. Much appreciated. Have a nice weekend. That was Jim in Palm Harbor. So it looks like things have stabilized a little bit. All those yellow little squares on my next to my ticker symbols have gone away. So now we can say, okay, what do we got out here going on? You've got the Dow's off 102, the S&P down 12. NASDAQ off 81 points. Spot volatility index is up 7.5%. They're trading out at 15.11. Gold's up $10. Silver is up, well, it's flat out there. Okay, so let me just check to see if there's some questions that have come in. It's 1:35 in the afternoon. If there's questions, if you wrote in, I want to be able to get your question. Yeah, there are a few here. So looks like Hector is written in. Radio show timber. Okay, let me see here. Okay, nope, that was just some other stuff out there. Joey writes in. That's for some Joey. I wasn't paying attention. It did not say radio show or anything like that. That was not a. Here, John writes in. Hi, Steve. Nugget, all over the place. Any idea where it will end up? Let's go take. So the GDX is flat right now, but specifically, you want to take a look at the Nugget. Let's go take a look at our 3 time frame charts. Get a feel for where support and resistance is for multiple time frames: daily, weekly, monthly. Okay, it's populating. So price is in between the bottom of its daily and the top of its daily. Bottom is 31.69. You're at 32.95 right now. Top of the box is 37.65. So what we know here is the Nugget is above a level of support. It's above a level of support in the daily. It's above a level of support in the weekly, and it is inside the range on the monthly. Now, just for the heck of it, let's just take a look at the GDX, because that would be the better instrument to look at to understand profile levels. And here we see a little bit different picture. Why is that? Well, the singles versus the triples when it comes to profiles and many other tools just simply provide us with better data. And so, so to kind of answer your question about Nugget, I really think it's incumbent upon me and you to go take a look at the GDX. And so the GDX is trading in between its daily set of profiles, the bottom of 2760, the center is at 2835. If the GDX is going to have some movement to the upside, it really needs to clear the center of that daily profile at 2835. If it can do that, then what you're looking at, John, is run up to 2909. So just consolidating in between support and resistance. The weekly is doing the same thing. Support on it was 2762, and resistance is $30. Price is just slightly above the center line of the box, 2781. See where it closes at the end of the day here. It's a weekly time frame candle. If it closes under 2781, it's not really providing you with a whole lot of information as to what its next move might be out here. And the monthly has got some resistance up at 3179. I'm going to put on my other charts, the GDX. Let's go see what's going on there, John. And when we take a look at the GDX, let's populate it. Rhodes momentum indicator pattern. Even though price is inside the box, what it needs to really do, John, now that we take a look at this, is must close over Stevie's green line. That's about 2841 right now inside the GDX. So this is still a bearish pattern out here. Yes, price is above a level of support that formed a handful of days ago, but it's really below the normal resistance level, Stevie's green line out here. So I wouldn't suggest, that you take a long trade in the GDX. So that would be the same for the Nugget as we speak. Instead, it's saying expect and anticipate more downward pressure. The weekly chart, the same thing. The Rhodes momentum indicator, top pattern out there. The monthly doesn't have that pattern. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to Jupiter, Florida, and speak with Bill about Goldilocks. Bill, thanks for calling. Thanks for holding. How are you this afternoon?
I'm well, Steve. Thank you. And was wondering what your thoughts are, if you could give us an analysis on gold. And I'm looking at maybe a longer-term position in gold.
Sure. So let's look at the gold contract, and let's look at the daily time frame. We're just looking at bar charts right now. Here's what we know. We know that price has been trading in between the bottom of its daily and weekly profile. Those numbers are 14.99 and 14.89.20, and those are our key levels of support. 14.89.20 being the one that has the priority. And it's trading between that and really, quite frankly, the center of its weekly profile. And the center line of its weekly profile is 15.20. We're at 15.16.20 right now. So all I really see out here is a consolidation in between the 14.89 to 15.20 level, which is a relatively small range out there. It's as if it's just coiling to do something. The question is it coiling to move higher, or is it coiling to move lower? For that, if we look at just simply the daily time frame chart, the signal here in the daily time frame chart is that we have a topping pattern. Now, I'm going to get rid of the A to B equals CD, because until we get below the swing point, it's really not active. But here's what we know. We know gold's made several Rhodes momentum indicator topping pattern signals, a shooting star, an evening star, 2 evening stars, bearish engulfing, all of these confirming this top. We also know that price is below Stevie's green line. What that means is that we should anticipate further retracement. Not until price were to close above 1528.90 would we say, okay, price is over a key level of resistance, and it would be, do we start taking a look at the upside potential? So here what we have is just simply coiling in between 1489 and 1520. The daily shows a topping pattern. The weekly I'll just change this to weekly right now. Forget about Stevie's red line because that's going to be the daily. And what's the weekly time frame chart show us? I don't know. Let me do some wave counts. The wave count didn't get us to wave G. Let's try the alternative count out here. So I don't. The weekly time frame chart isn't providing me with a ton of information out here. Doesn't really have to. It doesn't really have to because we've got the weekly information that we really need with regard to its market profiles out there. So you're looking for a long-term position with it trading in this range. If you believe that 1489 area is a bottom, then that's what I would wait for. Because it's, there's nothing here to suggest that this thing is going to break above 1520 out there. The last thing that you and I would always want to look at is, hey, what's going on with regard to gold and the other major currencies? And in each of them, there are trading slightly higher out there. But now, is my data being updated correctly? Yeah, it is. It's being updated correctly. So that's what I see when I take a look at the charts for gold, the daily and the weekly time frame.
Okay. No, very good, Steve. I appreciate that. So obviously you're not thinking being long. Are you long the mining stock, Steve, or you just?
No, I'm not. And my thinking is that we're just trading between support and resistance right now. I mean, that's what I know. Sure. The daily topping signals are enough to suggest to me that if support fails, then it tells me that we're headed to 1412 or 1270, something like that as a figure. But support, it's really key to watch this support level. So, I can draw in all kinds of patterns. It really doesn't make sense to do that until we see support being broken. But it's the valid topping signals that would put somebody in a neutral or cautionary tone out here.
Okay, very good, perfect. Thank you, Steve.
You bet. Thanks so much for listening. Thanks so much for calling. And so that was our take on Goldilocks. Let me see if there's some other questions that have come in at 1:45. We want to make sure that we get everybody's questions answered. So we've got one more so far. This is coming from Earl. Earl says, hey, Dow drops 150 points at session lows after China trade officials cut U.S. visit short. Okay. So thanks for that information out there. Lee writes in. Let's see what Lee is looking for. Back looking at TVIX, is this one-day pop, or are we now heading higher in the spot volatility index? So how are we going to answer that question? Let's take a look at the spot volatility index. It's trading at about 1523 out here. Maybe the easy way for you to answer that question, Lee, is by taking a look at the spot volatility index, which right now is trading into Stevie's green line. It's actually red. And so it's all going to answer that question, Lee, we probably have to see about what today's close is. 1514 is the exact number of Stevie's red line. If the spot volatility index closes below 1514, Lee, there's only one way I can read it, which there still is downward pressure on the spot volatility index. 1514 is the number. Give it a penny or two in either direction out there. But that's the current message of the spot volatility index, and take a look at Stevie's red line on its chart specifically. If we come back and take a look at the New York Stock Exchange, advanced decline oscillator still is above zero. That's bullish out here. We can see that the spot volatility index is headed up towards, but has not cleared its 50-day exponential moving average. So that would be 1619. If price closes above 1619, we'd have a close above Stevie's red line, a close above the 50-day exponential moving average. And then what you would have to do and factor into the equation is, does that move create a one-day rate of change greater than 10% in the spot volatility index? I believe that it would. And if it does, then that would say you would not jump on that trade at the end of today's trading session. And the reason is, if I can find it out here, I think it's right here. And let's open up this right here. And right now it's a 9.25% one-day rate of change. So certainly getting to that 50-day would, in fact, do that. Those are green arrows on my chart out here. No, blue arrows on my chart. And typically on those days where you have a one-day rate of change greater than 10%, you see the S&P 500 either trade sideways or higher, either bounce or form a bottom out there. So those are the numbers as the charts are showing us at this stage of the game. I say at this stage here, Lee, you just sit tight on that trade. That's the best info that I can give to you. Did I cover the VIX earlier, Steve? That was coming from Tucker. Well, there you go. So you got a twofer out here. And Peter is asking about the TAS levels for the ES Mini. So, Peter, that's pretty easy. We can take a look at the TAS levels out here. Maybe let's look. So what do we know right now? Here's what we know about the markets with regard to the TAS levels. For the ES Mini, price has not gotten down towards the bottom. That's 29.72. Inside the NQ out here, price just simply come back again to the consolidation breakout level. That has held. The Dow Equity Futures contract has tested and rejected so far the bottom of its daily profile, 26.924. And the Russell 2000 is trading right on the bottom of its profile, Peter, the daily profile out there. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's off 130, S&P 15. So let's take a look at, in the last couple of minutes here, what's going on in the cash indice charts, what to be watching for. So right now in the S&P 500, this is nothing more than a test of Stevie's green line. 29.91 looks to be that number, give or take a few cents out there. If price closes below 29.91, that suggests a further retracement. Of course, you've got to watch the ES Mini. We were taking a look at the TAS market profile, so that would be a level you would be watching for over the weekend, or Sunday night, I should say, Monday morning early. If we take a look at, but so far support is just being tested. The same is true inside the Dow, although you can see price just slightly below Stevie's green line, which is going to be around the 26,960 type of level. So support being tested. Of course, resistance was tested as well. That was the breakdown level of 27,281.65 for the Dow. If we take a look at the New York Stock Exchange, the interesting thing here is this is strong like bull. When I say strong like bull, we had already looked at the advanced decline oscillator. That was above zero. We could take a look at price has not even tested Stevie's green line at the 13,030 level. So this is still a bullish setup inside the New York Stock Exchange. Perhaps it's just waiting, as is the S&P 500, to get to wave number 7. That would be letter G on my chart. So the New York Stock Exchange in wave 6, and some of you may have caught that the S&P 500 was the same. A different message here when you take a look at the NDX 100. Right now, price is below Stevie's green line, 78.52 out there. But in the case of the NDX and trying to make a determination as to what it's doing, you really go back to the consolidation level of the NQ out here. And that would say you would need to see a closing in the NQ below 77.98 for it to get back into its lower range, so to speak, out there. That's how I would put those two charts together to figure out what was going on, and to simply go ahead and finish her off. The Russell 2000 still relatively strong. Price trading above Stevie's green line at 1551.40. Folks, thanks so much for being here all week long. Have a terrific weekend, and we'll see you on magnificent, marvelous, magical Monday. Take care and have a great weekend.